Well, the way the story goes is the bulls make money, bears make money, and hogs get slaughtered. And if you were short this market after Donald Trump's post this morning, then you in this story might have been the pig. You got to remember that the NASDAQ was officially in bear market territory, down 20% from all-time highs. And now one post from Trump on Truth Social announcing a major policy shift was all it took, and the markets ripped. The NASDAQ went up almost immediately. And I want you guys to remember that the Mag 7 actually got cheap. We've been talking about them being expensive forever, but today the markets found them down on the lows and cheap. And so people, fearing being left behind, gobbled up the dip. Now, here's the big news though. We're heading into tomorrow's CPI report, and depending on how that comes in, then this rally is either going to extend or it's going to vanish just as quickly as it began. So what do we have so far? Well, we've got the tariff pause. We've got the market's clear reaction and desire to go up. The VIX has the clues. And now the real question is, what's been priced in ahead of tomorrow's March CPI? The markets, they've lost trillions of dollars in value. And I think one of the biggest problems at hand is how are CEOs of big tech companies with global reach going to give forward guidance when they don't even know where they can sell and who they can sell to? Well, that's what we're going to break down today. This is the Stocks with Josh show. Thank you for smashing that like. Thank you for dropping a heart and saying hi in the comments. And hit the subscribe if you need help trading these choppy markets and getting an understanding of what's really moving the markets up or down or what to expect tomorrow. I don't have a crystal ball, but I'm giving you guys my opinion about what it is that the market makers are going to be looking at. Now, in regards to my pro trading community, ChartGoat University, I live traded with the family today. We had 3 beautiful wins, enough percentage point gains for people to walk away from the market and not even look back. But if you had stayed around looking at those charts, then all of my trend lines got absolutely ripped through by a great big green God candle. I pointed this out right before it happened in one of my GOAT alerts that the volume had come in and that this was, for the time being, going to be a legitimate move higher. And the markets, of course, absolutely ripped right into close. But all of this is oh so a convenient setup for tomorrow's big data day, which we already knew was going to have a huge impact on the market. And it's exactly what is the Fed's reaction to all of this, because he has to contend with inflation. And as I've said in a number of recent videos, both of them have to contend with the American debt that needs to get refinanced here this year, that's simply raging out of control in the middle of this mass negotiation and distraction over tariffs. We have a spending problem, we have a debt problem, and we need the rates to come down. That's part of the big story. But we made money today, and so I'm just going to say, if you didn't make good money today, then stop trading alone. Come learn the charts and trade with me live a couple days a week. I'm going to leave a link in the top pinned comment for the Stocks with Josh community. Come check it out. So let's just recap exactly what happened. Breaking this morning, Trump posted on Truth Social announcing a 90-day pause on tariffs for most U.S. trading partners. But here's the key part. Of course, China was excluded. In fact, tariffs on China's imports were increased to a staggering 125%. Folks, that has absolutely never been done ever before in the history of Wall Street in Washington, making them the absolute highest on record. According to the Post, over 75 countries had been petitioning for relief, and this 90-day pause is meant to open the door for fair negotiations. The market took this as a short-term positive. The S&P and NASDAQ both spiked immediately, volume flooding in after the announcement. But here's the bottom line. Make no mistake, this is not any form of a de-escalation. This is at best just a little reprieve from nothing but bad news. China did respond almost immediately by issuing a formal travel warning to all of its citizens visiting the United States. So that's kind of concerning. So even though tariffs are easing globally, U.S.-China tensions are absolutely not. They're ramping up, and that's something that the markets are going to have to digest, and they're going to have to digest them very quickly right before getting the March CPI. So the markets responded very quickly. The SPY jumped off of its lows retraced back above 5160, which is a significant number, and the Nasdaq surged 2%, reversing some of the month's bear market level losses. Semiconductors were strong. Names like AMD and Nvidia rallied on reduced global tariffs. Well, the price was in the gutter. Industrials and materials also got a lift, but the China ADRs like BABA and JD were very mixed. That's because while global tensions are easing, China, of course, is being targeted directly. So those names are obviously going to stay under pressure. And now get this. The Dow surged more than 2,400 points after Trump's post. Now, this was one of the biggest one-day rallies in the past 5 years. So this was a huge move. The volatility that we've been experiencing recently has been largely unprecedented, only aligning with significant events like the COVID 2020 crash, the Great Recession of 2008, or the Great Depression. And so we have to ask ourselves this question: is all of it been solved by this small momentary step back by the president, or are we still in the midst of absolute Trump tariff chaos? I'm going to assume it's the latter. And the next leg of this event is going to be the Fed's response. And if this dude is not dovish, the markets, of course, are going to freak out again, because we really need at this point to build on some sort of positivity trend. Otherwise, we're going straight back down to the lows. So that big move gives you a sense of just how much this headline shifted sentiment, at least for the day. Now, let's talk about the VIX. Because this chart is key to figuring out if this is a bounce or if this really has legs, or whether or not it's going to fade, whether we need to be selling the rip. The VIX spiked to nearly 58 last week. Now that's a panic level move. But now we've pulled back to around 36, and we're going to be rejecting off of that. And we rejected off of that 48 level very, very cleanly, which was pretty important. I highlighted that this last week. Now, this is what volatility unwind looks like, and it usually means relief is in play. But here's the catch. We're still way above 30, which means that we're not in a calm, peaceful market. And that means fear is elevated, and we're not back in low volatility rally conditions just yet, which means this may not be the reversal that everybody is hoping for. Now, though, if the VIX holds here or starts rising again after tomorrow's CPI, then this may easily flip into what is called the sell the rip setup. The hedge funds are not going to be taking a hit of the hopium the way the retail market will, and they'll be much quicker to react if the markets don't like that CPI read or anything that the Fed says. So the bottom line is that volatility absolutely is cooling. The VIX looks much better this afternoon than it did this morning, but volatility is by no means gone. Now let's look at what could change everything tomorrow, and that's the March CPI report. The market is looking for headline CPI to come in at around 3.5%. They want core CPI at 3.7%, and that's only slightly softer than last month's 3.8%. Now, if the core inflation comes in hot again, it will absolutely back Powell into a corner. But if we get a softer read, say like something like 3.6% or lower, that absolutely would give the Fed some breathing room if it is his intention to bring rates down. Now, right now, the Fed funds futures are only pricing in 1 to 2 cuts for 2025, and that is still down from 3 or 4 cuts that the market was expecting just 2 months ago. So the bar has moved. We're also going to be watching the 10-year yield. Now, this is important. If it breaks above 4.5% after the CPI, we absolutely are going to get another sell-off in growth stocks, no matter what Trump posts next. This was the very first gesture of de-escalation that the market had seen, and they reacted to it bullishly. But if we do not make progress, and if we can't get the rates down or at least get a dovish signal from the Fed, this will be a sell the rip moment. I do want to leave you on this very positive note. The market is actually up 90% in the last 5 years. Yes, up 90% in the last 5 years. So if you put $100,000 in the market 5 years ago, you would have $190,000 in just a short period of time. You can really see how your money can begin to multiply on Wall Street. So it did make sense for people to gobble up and buy the dip, because the fact is everything is on sale. But I need to repeat myself. Trump's tariff pause gave the markets a simple sugar high today. But with China excluded and the CPI on deck, it is way too early to call this a trend reversal. So I want you guys to keep your eye on the VIX. I want you to keep your eye on the 10-year yield and tomorrow morning's CPI print, because that's where the real news is going to begin to play out. If you found this helpful, I want you guys to hit that like and hit the subscribe and get positioned to get the next video, and consider coming and joining me over in my pro trading community, Stocks with Josh, Chart Goat University. I'm not going to say that all we do is win, but we definitely have more wins than losses. Let everybody know in the comments section, fam, what you made today. If I helped you make some money, I'd appreciate you passing on the good word. This is absolutely a supportive community, a helpful community, and we do a lot of education in our live trade sessions. There's actually somebody in the Discord to live trade with 5 days a week. I'm on the top tier, trading Wednesdays and Fridays. Don't trade alone. Come check it out. Come be part of a supportive and winning family. Talk to you later, guys. Peace and blessings.